Well, pretty much nobody expected what they woke up to this morning. I certainly didn't, and maybe I should have. I'm not sure, but definitely didn't expect. The economy is way hotter than most people, I guess anybody expected. Maybe President Trump or Scott Bessent knew that it's this hot, but if they did, they didn't tell us in advance. So the numbers are all hotter. I mean, right down the line, every single number that came out today is hotter than expected. Then there was a lot of numbers. The result was, of course, that the bond market sold off, and interest rates on the 10-year went up 4 basis points, and it's kind of cooling off a little bit now. Maybe it's not going to stay up as quite as high as it was, but that's significantly higher than I promised you it would ever go, because it's a great shock to the system this morning. I'm not sure. I mean, obviously, what the system is thinking, what people are thinking, the market is down, the bonds are down, interest rates are up, all this stuff is happening because people think, oh my goodness, then maybe the Fed isn't going to cut the next quarter point. Well, we've got two big reports coming up that will probably have a lot to do with that. One's coming up tomorrow, the PCE. I do not expect this to be a shock in either direction because, again, I've mentioned the PCE is usually kind of mathematically available to us before it happens. And then we've got the jobs number next Friday, and that'll be the big deal that everybody will be paying the most attention to. But of course, between then and when we actually get the Fed making their next decision, you got the CPI and the PPI again in October. So lots of stuff can happen between now and then. But right now, the market's going, whoops, this market is going crazy. The jobs numbers were way better than expected. Therefore, the Fed will not have the excuse that they used last time to lower rates. Well, okay, we'll see what happens with all of that, but that's what's going on. All right, but then there was some good Tesla news this morning, and so Tesla and even the markets are starting to bounce back up again this morning. This, by the way, Brian, if you watched Brian and I last night and the night before, we were talking about a potential breakout above 440. We got the breakout yesterday. Brian said that might have been a false breakout. No, this is not showing us that we had a false breakout. What this is showing us, we had news. And news is always going to get in the way of these technical analyses and get in the way of even fundamentals. The fundamental that's breaking this morning is really important, but it's not one that the average Wall Street investor is aware of, as opposed to us in the smarter, world of the retail traders. All right, let's go ahead and take a look at what's going on. So we got Elon Musk coming out this morning, posting on X. He says version 14 goes into early wide release next week. Then 14.1 will come out about 2 weeks later. I guess that'll be like fixing the bugs and all that kind of stuff. And then finally, 14.2. Don't understand exactly why we've got the, two choices, two of the versions coming out like that, one after the other. I can understand the one for the bug fixes, but anyway, we got three new versions coming out shortly. The car will feel almost like it's sentient by 14.2, a sentient being, like it's alive. All right, Teslarati reports on that. He says Musk's recent announcement builds on weeks of teasers about the capabilities of FSD 14. He has described the system as the second most important AI autopilot since FSD V12. I think by what they meant by that was the V12 was the most important update, and now this is the most important update since then, which first reached Tesla employees in November of 2023. Think about that. November 2023. Version 14 is expected to feature a tenfold increase in parameter count, a critical upgrade in the neural networks that are utilized by Tesla's autonomous driving system. One key improvement for FSD 14 will be fewer nags or steering wheel prompts, which drivers have often criticized as annoying, you think. While Musk has highlighted that FSD 14 is not the same as Tesla's unsupervised FSD that is being used in Austin's robotaxi fleet today, the update is still expected to be a transformative leap in capability. It feels alive, Musk wrote in a post on X. Then we have this from Narutium, Narutium, posting on X, says Wall Street analysts project the picture have projected the picture of a company collapse almost every quarter. Speaking of Tesla, Elon Musk responds. He says, a lot of people thought Tesla stock would collapse as the tax credits came to an end this month. Guess not. Barron's says this morning Tesla stock edged lower early Thursday after data showing its sales results in Europe were still struggling. No, it had nothing to do with this. It had nothing to do with the European sales numbers. I mean, it may be, but I'm pretty sure not. Shares of the electric vehicle maker were down 1.3% at 436.96, and pre-market went down more than that, like into 425, back up to around 430 last time I checked. While S&P 500 and Dow Jones Industrial Average futures were down 0.3 and 0.1, and they went down a lot more than that. The move followed the European Automakers Manufacturers Association release of sales data for August. Tesla sold 8,220 vehicles in the European Union. That's down 37% year over year. BYD sold a lot more. They sold 9,000, 1,000 more, 130 cars. It was the second consecutive month that BYD had a leg up. Now, if you include the UK, Norway, and other countries in the European Free Trade Association, then Tesla surpassed BYD, selling 14,831 cars compared with BYD's scant 11,455. Tesla sales are now down 22% year over year. BYD sales are growing rapidly. Obviously, they started from a low base. Tesla has sold 133,857 cars in EFTA so far this year. That's down 33%. So that's about 65,000 cars less than last year. As Brian Wong pointed out last night, we hope to sell more Model Ys than that in the fourth quarter. Model Y longs in China alone than that missing European information. So I think Europe is still down, but apparently other information showing that Europe, or at least shipments out of Berlin, are doing better than most people think, and that could include some people that are not in the EFTA. This is Randy Kirk. You know what to do. In the week ending September 20th, the advanced figure for seasonally adjusted initial claims was only 218,000, a decrease of 14,000 from the previous week's revised level and well under the 235,000 that was expected. 218 is a lot less than 235. The previous week's level was revised up by 1,000 from 231 to 232. So this is a big, big, big deal. And that's partially what's impacting the markets this morning. The 4-week moving average was 237,000, a decrease of 2,750. The previous week average was also revised up 250. All right. Then the advanced seasonally adjusted insured unemployment rate was 1.3%. I cannot remember when it wasn't 1.3. I mean, every week I say, I should just record this and slap it in there, and it would save me some time. A total number of continued weeks claimed for benefits in all programs for the week ending September 6th was 1,790,000. That is a decrease of 44,000 from the previous week. Last week was also a decrease. So what we're seeing is people are not having as much trouble finding new jobs. Okay, why would this be? Well, okay, we've sent back 2 million people to their lands of origin. 2 million people have gone back. Do you think it's going to make it easier for Americans to find jobs if there's 2 million less people competing for those jobs? And now we've got H-1B visas that are under stress, and that's going to make it easier for Americans to get jobs. And then you've got the hot economy. Oh, yeah, let's do that. Real gross domestic product increased at an annual rate of 3.8% in the second quarter of 2025, according to the third estimate released by the U.S. Bureau of Economic Analysis. In the first quarter, real GDP decreased 0.6%. The increase in real GDP in the second quarter primarily reflects a decrease in imports, which are a subtraction of the calculation of GDP, and an increase in consumer spending. What? Oh, wait, 60% of the economy. An increase in consumer spending. These movements were partially offset by decreases in investments in the second quarter and exports. So we had fewer exports and we had less investment, but what we're seeing now is more investment coming in, a very high number, according to the Atlanta Fed. Okay, so what you're talking about here is way hotter economy. The original GDP that number that they came up was 3.0, then it was 3.3, and now it's 3.8. Um, these numbers getting adjusted and adjusted are, continuing to give us, I think, bad feelings about whether we can trust these government numbers. Anyway, so that obviously the economy is very, very hot. That's going to help jobs. The Atlanta Fed is at 3.3, and uh, we've been reporting that every day. We'll get a new number tomorrow, but probably it's going to be up because these numbers, I think, are included in all the numbers we're going to talk about today are included in why the Atlanta Fed is doing their upgrade tomorrow. So here we go. New orders for manufactured durable goods in August up, following 2 consecutive monthly decreases. They increased by $8.9 billion, or 2.9%, according to the U.S. Census Bureau. That followed a 2.7% decrease in July, but excluding transportation, new orders increased by 0.4%. Excluding defense, new orders increased by 1.9%. So in other words, just regular old business on durables was up 1.9%. Transportation equipment also up following 2 consecutive monthly decreases, led the overall increase, 7.9% up. Again, people are looking at this and going, well, will the Fed be able to cut? Then this is from WAAAAY. The United States goods and services deficit decreased. Okay, wait, this is the goods and services deficit. This is the difference between between imports and exports. So the deficit would mean that we are, that's where you are getting more imports than exports, but that deficit decreased. Okay, so this would mean we're doing better, and you'll see how that works. Okay, decreased by 16.8% from July. 85.5 billion is a really low number, way lower than was expected by analysts. So exports of goods declined. So exports declined, but only by 2.3 billion. And imports were down by almost 20 billion, almost 10% compared to the previous month. All right, if that's not enough, everybody's expecting housing to be horrible, right? Housing, we had the new housing numbers the other day. Everybody goes, wow, that's a glitch. What's going on? How come new housing sales were so good? Well, how about this? Existing home sales remained essentially the same in August, falling 0.2% from July. Month-over-month sales increased in the Midwest and West and fell in the Northeast and South. Year-over-year, sales rose in the Midwest and South and fell in the Northeast and West. So this is way better than expected. Also, people were expecting this to be a horrible number. According to NAR Chief, National Association of Realtors, Chief Economist Lawrence Yun, home sales have been sluggish over the past few years due to elevated mortgage rates and limited inventory. However, mortgage rates are declining and more inventory. How about way more inventory is coming to the market, which should boost sales in the coming months. So we might end up having, as I said a couple of months ago, Nicholas Gibbs was also agreeing that we could see a pretty decent fall and winter in the housing market, assuming the interest rates continue to come down, which today is not happening. All right, we got the President of the United States approval rating at 49% this morning. We have got inflation at 2.01 in the overnight. That's down. We've got the inflation in the year over year at 1.91. That's a little bit up. It's still way under 2%. And now we've got the PCE equivalent at 2.42, which is down also. And then, as mentioned, Atlanta Fed update tomorrow and sitting at 3.3. All right, let's go ahead and look where the stocks are going. So Tesla is hanging in there around 430, 428.80. That is down 3.16%. I wouldn't be surprised to see it move back up to around 435. It might not, but that's kind of a possible. That 435 has been kind of a place where it likes hanging out, especially going into the PCE tomorrow, but we'll see. The Dow Jones is down 0.12%, NASDAQ down 0.51, although recovering, both of those recovering. They were worse, and the S&P also recovering, but it's still down 0.39%. We've got the Magnificent Seven. Apple is up and NVIDIA is up a little bit. The rest are down. All were down more. Again, all recovering. VIX, 17%. It jumped up pretty big this morning, but it is now off of those higher numbers a little bit. And the Cathie Woods, unsurprisingly, are all not doing well this morning, but improving a little bit. So let's see what's happening with the bonds. Oops, I just hit the wrong thing here. We got the bonds. All right, they're improving. They're getting a little better. They were down over 4%. Over 4 basis points. They are down, up 3.6 basis points at this point, 4.183. We need to get it back under, we want to close at 4.15 or lower so that I can be right. There's no other reason, just so I can be right. Okay, we've got oil down 83 cents. So that is, after bumping up, it is now back to $64. We've got natural gas up 2.9, but still well under $3 at $2.94. You've got gold down 4.6. That's just dollars. That's dollars. $4.40. $4.20. It's jumping around a lot. But it's barely coming down a little bit from the highs. Silver up 1.21 this morning. Might be closing in. No, I don't think I think it's still a buck off of an all-time high. We got copper, a little bit of that big jump yesterday coming off. That's down 0.95. If you didn't, 0.95% at $4.71. If you didn't hear me last night, the copper thing is because a huge mine in Indonesia had a major accident and called force majeure, closing off production for a time. Unclear. I haven't heard anything recently about when they think they'll reopen. We have got the dollar mixed. We've got Bitcoin down 1,918, which is 1.66% at 111,606. And Ethereum also down bigger, down 3.56%, almost down to 4,017. There you go. So that's what's going on later on today. It will be a different day than normal. We will have a guest. I'll let that be a surprise. We have a guest at the 5 o'clock hour. It's somebody you like a lot, and he'll do a fine job. But it won't be 5 o'clock. It'll be actually a lot earlier because he has an early schedule. So we'll put that one up probably about 3:30, right around 3:30. And then, of course, Cern Basher will be on tonight, probably around 6:37, something like that. We'll see, but it'll be around that time. Last night would have been Brian Wong and Brian White, both on last night. Both of those are extremely well worth going back and checking out. I'll put both cards up for you to make it easier for you if you didn't already see those. Yeah, both of those. Trust me on this. You want to see both of them. All right. What have I got left here? Should I check Tesla just one more time? Just because I know it was just 2 seconds ago that I checked, but what the heck? Yeah, almost 4:30. I think we'll be at 4:30 in a second. So that's, again, I think 4:35 by the end of the day, but not going back over 4:40 until we get the PCE out of the way. And then we'll see, but mostly still concentrating on what's going to happen on October 2nd. All right, that's all I got, and it's been fun, great, amazing talking to you.